Hi team, let's talk about losses, stop loss, how to manage risk, and how I manage the mental aspects of having losses, having to cut positions. Overall, as we all know, we've read it, we've talked about it, trading is a mental game. We are leveraging, we are applying leverage to our positions, basically looking for trouble. I would like to make sure that I have a very clear defined way how I cut my losses. And I cut my losses first of all with a stop loss, and the stop loss can be based on a per trade basis. So let's assume you enter a trade, you will have obviously a stop loss and you will have a target in mind where it should go. This all basically will show you the so-called risk reward scenario. In this case, the reward to risk would be 2.76, which is obviously a very favorable one if this would be achieved. So this 1R loss here we can define, which is our stop loss, which could be an amount, and the amount then could be $100, could be $50, 5 or 5,000 or 50,000 bucks. So it really depends on the account size, what you have. The regular amount, what you want to risk is basically not more, in my opinion, than 0.5%. Better, less, okay? Profits will come over time, not with one single trade. So first thing what I do is I really have a clear understanding of the stop loss amount, what I'm going to pick, and the amount of the loss here, what I'm going to choose. So in this ATR scenario, we will talk about maybe 1 or 2 ATR. So 2 ATR would be in this case, for example, a $60 stop loss. This example would have been enough. So this is a per trade basis, but in real life, stuff doesn't always go like we want, right? I would say the pure, beautiful picture would be of a breakout trade would be we break out, we retest, and then we go. Right, so this is how it's being defined in books, and the books talk about it like it would be very normal that we should always wait for the retest. I think in real life, being pragmatic, and I think as traders we have to be pragmatic, there is not always the push back to the level, and then we will miss a lot of opportunities. So I think it makes sense to not only have a per, let's say a per trade based stop, but also a per zone based stop. And this is something what I love, and what I'm trying to say here is the following: I plan to enter not on one single trade. I need to plan to enter on zone. And I'm using a zone stop loss, and basically I will have multiple entries which allow me then to fulfill and complete my position. This makes it easier. We are achieving one average entry basically, and the average entry should be obviously around the box here what I've shown. So this is how I'm approaching this. So as per zone stop loss is for sure something what I'm using on a daily basis. So this is basically really what I do every day. But every day I also have the third stop loss in place, and this is, I would say, this most important item next to that. It is the daily loss limit, and the daily loss limit you have to have in mind. You have to basically have a loss limit, the maximum amount what you want to loss per day. I think it's important that you have a number in mind, that you enforce a number if it should go bad and everything should go against you. If not, this one day, this one trade will maybe kill a lot of your account and account performance, and this is something I think we have to avoid at all costs. So use daily loss limits, use also weekly loss limits in order to protect you even further if you basically, your trading isn't in sync with the markets, and this can happen. Market does have different cycles, does have different months of strength, and it means maybe if you're wrong, you may be completely wrong, and then you should stop for the week and maybe even for the month. Let's talk about a little bit practical, okay? And this is now the second part of this video. I would like to go now a little bit into the chart here, into this breakout scenario, what we just had, and how I really manage this. So what's happening here is that we have the breakout, and when the breakout happened, everything looks fine, sunny and beautiful, but in reality there's a pushback and then a confirmation of basically the market structure, and then we move up. When we enter the trade, we don't know about that, right? And looking back in retrospective, everything becomes so clear, and this is how books are written. Books are written by analysts who cannot basically probably trade, and that's the reason why it sounds so easy in the book. One pragmatic way to handle this is the stop per zone. So you will have multiple entries like I mentioned before. So maybe you have one entry here, one entry at the limit here, at the direct at the zone, and maybe one here, and then basically you will start to become nervous, and that makes sense that you maybe become nervous because again the position is moving against you, and we talked about having a $60 loss here, and the $60 would be the stop would be around there. So for sure there's still some space, but actually your position is underwater. So what I am doing, as I'm thinking in this risk reward scenario, I don't have problems, and this is maybe sounds a little bit counterintuitive. I do not have problems if I cut positions in a loss of half an R, okay? So I don't have a problem if I cut position here, if I cut, let's say 50% of the size. And the reason is, if this trade turns like we all want it, like we get a 3R, 4R, whatever it is, then we will still make money. We make 1R, 2 profits, 2R profits, whatever. But overall, if I get a full loss, I will have a full loss, and this will be harder to recover. So, and this is something mentally what I think we have to work on and try to understand better, because this is why trading is mental. And mental, I would say, simply very, very important to learn is cutting a loser has never hurt anybody. Cutting a loser without an over-leveraged position is nothing to really talk about. But what we talk about, and maybe which is painful for us, are the trades when we are over-leveraged, when instead of managing risk, we start to pray to somebody above and we are getting a margin call. So liquidations levels, especially in crypto, are common. We have seen the VIX in the last couple of days and weeks in here on Ethereum, on Bitcoin, in Solana, whatever. These are guys who cannot manage a risk. These are guys who are basically getting wiped out of the position via liquidation. Other market participants, as we can see, say, thank you very much. I am very much willing to buy that, okay? And these are the cheapest entries, and we have to avoid being wiped out, being forced to exit a position. And when I cut a loser after a certain amount of time, when it's not going for me, then it's not a problem. Now, contrary to what I said, I love to cut losers under, let's say, half an R. I don't like to cut winners when I really have a trend in mind. And what I mean with this, I'm really looking for a minimum at 2R to take profits. And when I take a 2R profit, this is a winning trade which will always make me money. And over time, we will collect R's like we collect money. So this is something I want to focus the next video about, which is the R multiple in trading. I think this is very, very important to understand this, and the R multiple will help us, and hopefully will help you as well, to, let's say, get a more objective view, get a little bit more distance for the money aspect, and get, let's say, more focused on the trade itself, trade planning itself, and not thinking about the amount of money and how it will affect our life. Thank you very much, team. See you next time. My name is Christoph. I'm from Trading IQ, and have a great week and great trades. Goodbye.